Hey guys, Mike here. So we're going to go over a few things in this video to show you how rare this market really is and what's happening right now. Because you're seeing some things go up at the exact same time that you normally just don't see. And I'll show you that on the charts. And I'll show you why it's happening. One of my favorite charts. It's the easiest thing to read if you want to know like market or like sector rotation and stuff to look at and what time and then what period we're in the market cycle and the economic cycle and all that fun stuff. It's definitely one of my favorite charts. And of course, we'll go, you can't help but go in NVIDIA's chart, right? Because it's just the big engine that just keeps on giving and giving and giving. And we'll go over a few others as well. And I'll show you why NVIDIA keeps moving up, of course. But when you look, one thing that's really wreaking havoc on a lot of different things is the 10-year yield. Man, this thing we hope is going to come down here. Nope. Turn back up because what keeps happening, the economic news keeps coming in better than expected. At least that's what the market wants to make you think, at least. And so that's what's happening right now as it continues to push up and the yield curve continues to steepen and all that fun stuff. And, you know, if this thing keeps going, the first stop's going to be right up here, 4.382. But as I put in the morning news brief this morning, you can see right here that T. Rowe Price is actually calling for it to get to 5% over the next 6 months. And just to read this out very quickly here, the benchmark Treasury yields may soon hit a key level on the back of rising inflation expectations and concerns over U.S. fiscal spending. And the gentleman calling this out is the Chief Investment Officer of Fixed Income. So he helps oversee about $180 billion in assets for the firm. So we'll get to see if he knows what he's talking about here. The call stands out against market expectations, of course, because the market's calling for lower yields after the Federal Reserve cut rates for the first time in 4 years last month. It also underscores the increasing debate in the world's biggest bond market following strong economic data that has raised questions about the likely pace of cuts. Yields on 10-year treasuries most recently traded at 5% last October, hitting their highest level since 2007 as fears of a prolonged period of high interest rates gripped markets. Turbulent repricing could be on the cards if Hussein's prediction proves accurate, with strategists currently expecting the yields to fall to an average of 3.67% in the second quarter. So we'll see who's right. And when we go on this, you can clearly see something you just don't get to see a lot, right? And it's the S&P going up, the dollar going up, and the 10-year Treasury yield going up. And when you scroll back and look at this view, you can see what I'm talking about. Usually, you're going to get the yields going sideways or down, or the dollar sideways or down while the market's going up. Sometimes can one go with it at the same time? Sure. You see the 10-year yields kind of pop a little bit right there. There you can clearly see markets going down, yields going up, dollars going up. Here you can see the 2022 crash, right there. Yields are going crazy, dollar was going up, and the market was going down. All right, you can go back as far as you want to go back. There in 2018, you got a good idea. It moved up. You see yields going up, dollar going up, major crash right after that. But then any other time, it's just not normal to see yields, dollar, and the market doing what it's doing right now. And so how this is going to end, it's going to be fun to find out, to say the least, that's for sure. But this is what happens when a yield curve uninverts. And you start to see a lot of fun stuff going on. What else are you seeing? There's gold and silver, right? Gold and silver going crazy, and that's usually, obviously you see a big run up, don't see gold and silver going up, here's going up, don't see gold and silver going up, and now you see gold and silver as well, absolutely going ballistic. And so, you know, you got all this stuff going up at the same time, and then you can pull in one more. You say, let's go ahead and just pull in uranium. What the heck? We're not even pulling up nuclear right now. I'll go over that in just a minute. Well, you sit there, you know, pull up uranium, and the funny thing is, if you look at just since September, like uranium's going absolutely crazy. Nuclear going absolutely crazy, so that's nuclear energy, okay? And as you can see, uranium at 37% on that ETF versus the silver, gold, and versus the SPY. Now, of course, why is some of this happening? Right here, right? This is your stock market cycle, your economic cycle, precious metals, energy. Where's it at? Right there, usually somewhere near the top. The top could be months and months out, could be weeks out, right? But that's when you normally see, and that's the stock market, the top one. The ones to the right is the economic cycle, but that's when you usually see these things going crazy, okay? And so I don't mean we're at a top, okay? I don't mean we're not going higher, nothing like that. But that's a lot of times we just see rotation into during this period. You can pause that and look at what else they rotate into. You know, might notice on that chart also where TLT falls. TLT does not fall where it's at now. TLT falls when the stock market is falling like crazy. And you're seeing 10-year Treasury yields do what? We talked about this before. If it's going up, TLT is going down. We put these trend lines in for a reason right here. You can see us down to the 0.79 fib, almost touching that next trend line down, which we had talked about. If 10-year yield spiked again, and they did. Here's your lines to look at. If the 10-year does actually go to 5, you're definitely going to be hitting these tree branches on the way down, right? 90.60 is going to come into play, 88.91, 87.36. Again, it's not some crazy move like a regular stock. But again, if you're a TLT fan, you don't want 10-year Treasury yield to continue to go up. Now, S&P 500, you can see we fell out of this beautiful channel today. Say it ain't so. But again, you know, do we end up coming into a box like we are with the Qs right now and just kind of trading into the election? Because normally you trade up. It actually runs up usually into the election, the week of the election. And so that normally is what happens. We'll see if that's what's going to happen this time. But again, we'll keep it simple here. 579 right there is going to be the level below. If that breaks, obviously going to open up to that daily fair value gap and some more downside. On the upside, we'll go ahead and mark it out right here around 586.11 it looks like. So we'll put that right there. Boom, you can do that right there. And we'll see. I mean, this is about a little over 1% range for the S&P if I'm not mistaken. And so we'll see if they're going to range bound us here until we get about a week for the election, then start running us up. Or is NVIDIA going to drive the whole freaking market up? Because again, we'll get into that chart, but that seems to be what it is doing at this point in time. It's doing a lot of the heavy lifting. And right now, we did close above the 5-day moving average, which kind of look over is see in the short term here, does it roll over, right? And so we did close above it today. But if it starts to turn down, as you can see on the chart, anytime this turns down and we get a candle close below it, then we normally see a little bit of downside. But right now, the bears cannot push this down. Every time you get an intraday move down, the bulls step right in. Every dip gets bought up. And so again, at some point in time, that will come to an end. No doubt about that. But right now, that is not the case. So we keep getting these intraday reversals, okay? Now, when you look at the Qs, look at this right here. Still in the box, okay? And so we're going to see if they keep us here right now. And this is another simple one. It's like if you break out of the box, we've been here. I forgot how many months ago we did this with S&P, right? We break above the box, all-time highs, here we come. Okay, it's going to break 502.54. If we end up breaking down below the box, obviously that little gap right there is going to get filled most likely. But we'll have to break a few things to get down there at first, okay? And it's not even that big. Look, I mean, right here you break the box, you only got 0.75 to go to all-time highs. You break down, go to that box on 2.5%, but you would still have to break 485 first to make that happen. Now, IWM, big red day today on IBM, and I'll go into basically why that is. But first, you know, I'm going to draw this out. If it does come down, we talked about this trend line this weekend, right? This would be nice because that trend line, that's where the golden pocket sits at. That's where a 4-hour fair value gap sits at. So that would be a nice confluence to get a bounce if that's the case. Remember, seasonality wise, if we never get to play out, is pretty good November, December-ish for IWM. But of course, what was red? Well, we'll change this so you can actually see the color. I've told you this has been tracking crypto, right? And so what was crypto today? Crypto was red. All right, got a pullback after a big move up over the weekend. And so, of course, IWM followed right along with it. And so, again, we'll see how long this connection is going to take place. It's not like normal in the past, but for whatever reason, risk on is risk on, and small caps are risk on, crypto is risk on. And so if crypto can get a bounce, then IWM will too. But just watch that area right there for the bounce on IWM if it comes down. Now, NVIDIA, you know, wouldn't go without saying, another day, another new all-time high for NVIDIA right here. And if you're looking for any kind of pullback, if it gets a pullback, again, it came up, retested the old all-time high it just recently set and bounced from there on a smaller time frame. And, you know, when you look at this, we'll pull up where it can go to. We'll pull the fibs here, like we did last week, you know, 147.52, definitely in the cards. Heck, I think it's probably in the cards this week or next week. I mean, the way it's moving right now, the way the options market is doing and stuff, 153 above that, 157 is above that if that is the case. And these, you know, these support lines are holding up. Okay, until they don't, nothing else really matters, right? That's the white lines we've talked about the levels many times. What's funny and probably surprising to you is this thing ain't even overbought yet. And you know NVIDIA can get crazy overbought for like weeks, right there. We hadn't even got up into overbought yet. And normally when it gets into overbought, that's when it goes into hyperdrive. And so we hadn't even got there. Let me know in the comments if you were surprised by that, all right, after this big move up. But it's because of the way it's moved up, right? It's been going up and down, retesting what was resistance, turning it into support. MACD still has room to run if they want to do that. And so, you know, it's amazing me when I look at this today, the fact that it's still not even overbought. And one reason this thing continues to run up is because the options market, they continue to buy calls. and a lot of heavy gamma exposure to the upside on this one right here. So you know, are you seeing a gamma squeeze? I don't even think you're seeing the gamma squeeze yet, to be honest with you, if that's going to happen, right? But you saw them, they're just buying calls, and then they're selling cash secured puts and stuff. That's what they were doing. And so collecting a lot of premium and everything. And so that's why it just continues to grind higher. But you hadn't seen a total squeeze. It was a decent day today. But you know what I'm talking about when I say squeeze, because if you ever traded Tesla, you know exactly what I'm talking about. SOFI, new 52-week high right here. Again, this one continues to go. What was rare, though, look to the right, rarely do you see SOFI green and all the other fintechs red. But that's what we got to see today. And so that is a rare thing. And it definitely reached 1050 faster than I thought it would. But this has been a big move, right? I mean, usually you get these big moves like this, and it's not a high flyer. You're usually going to get a pullback. Okay, we'll see again if that's going to happen. If it does, I mean, right there, you know, obviously double rejection, third rejection is over there. So that's a tough line to get to. 948 really is where you're going to end up testing if it ends up pulling back. Again, if it goes higher, 1170 right there, it's probably going to be your next level up. I'd be surprised if we just blast right through this and go up there, but I would think 948 will probably get tested first, and that's a pretty decent pullback, especially for SOFI. I'm going to keep that trend line in place, that ascending trend line, just in case, because I've seen this before where it's moved up and then boom, we end up moving back down. This isn't one of those high flyers like a Firm or what's the other one, Upstart. Those are very, or at least one of them is very low float stock, so they tend to move a lot more. One big thing about SOFI though, remember one thing about this one, we'll go over the golden cross, right? Death cross, golden cross. This one did get the golden cross, and we look at this right here, right there on October 11th. Okay, and you've seen the big move, and we talked about this a few weeks ago. But when you look back, the last time it got a golden cross, it has been quite a while, believe it or not. And when you look, when it got it, you have to go all the way back over here. It had a really nice move, okay, a really nice move. And so that's the last one right there in 2023. That was a big move up for it, right? So could this just be getting started? Sure, I think you need to pull back, try to turn some levels of resistance into support first. But, you know, I just want to put that out to your attention. Now, a lot of earnings coming out now. Verizon, GM, 3M tomorrow coming out. Also, Enphase is going to come out. We'll see if that can hold or is going to get pushed down to the 70s. Texas Instruments is going to be another one to look at. And then data, all we have is Richmond Manufacturing Index. So nothing to speak of. Okay, guys. Again, expect volatility. We had it today. That's going to be the name of the game leading up to the election. No doubt about that. So let me know how you're playing it, what you think about the market, and please hit that like, subscribe button on your way out. Think about signing up for the membership. Less than McDonald's combo. There's everything you get. And I'll see you guys tomorrow.